So before we begin, we'd like to thank our platinum sponsor, NYSERDA, for their continued support of the series. We really couldn't do it without them. We'd also like to thank all of our amazing partners, DELV, the New York City chapter of Young Professionals in Energy, the New York Association for Energy Economics, and the NYU Center for Global Affairs. Also, a big thank you to Energy Solutions Forum. I saw a couple of you in the audience for the policy primer on the subject. We actually have a bunch of copies in the lobby if anybody wants to grab one. And to Green Tech Media, as always, for being an incredible media partner and hosting the live stream for tonight.
And now, to introduce our moderator. We are very lucky to have Andrew Winston leading our panel tonight. Andrew is the founder of Winston EcoStrategies and the author of Green is Gold, a book that Inc. magazine listed as one of the 30 books all managers should own. As founder of Winston EcoStrategies, Andrew advises some of the world's leading companies, sits on sustainability advisory boards for Kimberly-Clark Corporation, HP, and Unilever, and serves as sustainability advisor to PricewaterhouseCoopers. Please join us in welcoming Andrew Winston.
Everybody can hear me? Am I on? Thanks for having me. Thank you so much to Clean Energy Connections and to, I got to stay on the mic, I know, to Green Tech Media. Let me welcome the panelists. I'm going to let them each introduce themselves. They'll do a better job than I will, but that was perfect order, actually. This is the order you guys are coordinated. It looks like we planned this perfectly. First, we have Amy Larkin, Stuart Greskin, and Kevin Brooks. From very eclectic different backgrounds. I think you all have bios. You just heard a little bit about me. I'll only, add to that I come from, kind of an eclectic perspective as well and spent the first part of my career in business, mostly in media companies, consulting in media companies, working up the road in Times Square at Viacom was kind of my last big company job, and then went off on my own and started this transition into figuring out where business and environment overlap. And I thought I was fairly new to the game, but I guess it's been 12 or 13 years now since I did it, so I'm one of the kind of middle-aged folks in every dimension, I guess, on this topic now. And it's been an interesting kind of 10 or 12 years seeing the transition and how companies think about environmental and social issues, and I think there has been a tremendous transition. And one of the real cutting-edge topics that we're going to really dive into today is how do we deal with things that we don't currently value? I mean, business works through markets fundamentally and through pricing things, and that's kind of the core of what we're going to talk about a lot today is what we don't value in business. And I heard Hurricane Sandy mentioned. You've got what's going on in the Philippines. I mean, there are serious impacts and costs to the world happening today from extreme weather, from resource constraints. From these very real pressures that are changing, I think, the nature of how we live and the nature of business. And if markets worked perfectly, we would solve these problems naturally. Business would be incentivized to do so. But they're not, right? We're not moving fast enough in any stretch of the imagination by any scientific measure. And I think the core of what we're getting at tonight is why. Why is it that we're not moving fast enough? And there's psychological gaps, there's political gaps. I mean, there's a lot of reasons, but at core, business and Wall Street, right down the street, works in a very efficient way when it needs to and when things are priced correctly. And so we're gonna kind of dive into that. So let me first just have each person introduce themselves quickly, and then I'll kind of throw some questions out. I know you all have, I think, cards you can send in. I will be tapped on the shoulder surreptitiously, I guess, when the cards are ready. Please send them up whenever you like. I don't have any real formal plan. I think we'll have a few questions up here, and then we'll try to make it more of a conversation for the whole time if we can. And I know we'll have some coming in from Twitter as well, so I hope we'll see those. So Amy, why don't you start?
Do you want me to talk about myself?
Yeah, just quickly introduce yourselves, and then I'll ask you a question to actually pull out all the juicy bits.
Okay, can you hear me? Just fine? Okay, good. I am a longtime entrepreneur and environmental activist, and I started one of the first affinity marketing businesses in the mid-'80s, and for 25 years I was a volunteer for Greenpeace doing a variety of things, including 2 stints on the board. And then in 2005, after Hurricane Katrina, I was watching CNN money, which at the time was anchored by Lou Dobbs. And he had 3 meteorologists on, and he said to each of them, so do I understand what this means is that we're going to have more intense storms like this, not more frequent, more intense? And they all said, yeah. And he said, I don't want to pay for that. And as soon as he said that, I thought, this is the window to walk in. And basically the next day I called the executive director of Greenpeace USA, and within a few weeks I became the director of Greenpeace Solutions and did a lot of work on that, working with multinational corporations across sectors, creating a few really transformative solutions. And since I've left Greenpeace, I wrote a book called Environmental Debt, The Hidden Costs of a Changing Global Economy, which was inspired by the work that I did with business.
Stuart?
So, hi everybody here and out there. So I'm Stu Gruskin, and I started my career in the private sector. I practiced law here in New York City for about 25 years. I then ended up in state government as the Executive Deputy Commissioner of the New York State Department of Environmental Conservation, which is the state agency that oversees environmental quality and natural resources in New York. And I really served as a policymaker and a regulator. And I also chaired the board of the Environmental Facilities Corporation, which provides financing for environmental infrastructure, drinking water and clean water, which is a euphemism for sewage. And after leaving state government, I did a little consulting work, and then I got a great job, which is working at the Nature Conservancy, which is one of the largest global conservation groups. And I am the Chief Conservation and External Affairs Officer in New York State. So I oversee all of our conservation programs here in New York, as well as our work with the government. So for example, the urban conservation program that we're starting in New York City, dealing with government agencies and working with the city on post-Sandy resiliency, policy, and things like that. So glad to be here.
Great, thank you. Kevin?
My name's Kevin Brooks. I'm the founder and CEO of Think Green Global Advisors, an investment bank boutique here in New York City focused on clean tech and renewables. We operate in the private equity realm, also public equity, public and private debt, project finance, sort of basic structures there. A little bit on my background. I'm out of Merrill Lynch, out of the utilities team there. We were institutional investor all-stars back in the day when Gray Davis and Enron had run amok, and that's sort of my initial experience with clean tech. Sort of the most exciting thing we could find the utility team at Merrill back in the day. But have been in the sector very active for over a decade now. Some causes that are near and dear to my heart. I'm on the board of advisors for the Make It Right Foundation, which is a nonprofit doing sustainable housing around the country. And I work closely with the Carbon War Room here in New York City.
That's great, thank you. And I just love that that an investment house is named Think Green. It just shows you things have really moved, and that you meant the kind of green we're here to talk about.
We do a lot
today.
of things different.
Yeah, that you're thinking differently. So why don't we start, since I think that the theme that they wanted us to focus on is this idea of environmental debt, and that's Amy's book. Why don't we start, Amy? Why don't you just explain kind of the concept in broad terms and a couple examples of where the public and or private sector are feeling this debt, and who owes it, and to whom?
Who owes it and to whom? Andrew, come on. So the basic idea in my book is that the financial and environmental crises are inextricably connected. So every time a government or a business says, well, we can't do that, it's too much money, in fact, there will be money that will be spent that is not mentioned in the deal. So here's an example. In 2009 in Thailand, 2011, excuse me, does everybody remember the floods in Thailand from 2 years ago? Horrifying. And it was a bad typhoon. However, the reason why it became catastrophic flooding is because of deforestation and logging that had happened 15 and 20 years earlier. So the land could not hold, the soil was gone and it couldn't hold the water. So then the auto parts factories in Thailand were, in addition to all the other suffering in Thailand, the auto parts factories that supply Toyota and Honda were unable to function for about 6 months. This cost Toyota 2.5% of its annual output, but it also put tens of thousands of workers out into unemployment that cost them their jobs in Kentucky, Singapore, and the Philippines. So you and I paid for the unemployment insurance for the workers in Kentucky, and local areas in Kentucky around those factories paid for loss of wages and all the other trickle-down problems from the deforestation that happened 15 years before. This is how the financial and environmental crises are connected. Another example, in the United States today, pollution, air pollution, costs more on healthcare than does tobacco. Now, we know what is considered the social cost of tobacco, but people still pay very low amount for energy, for gas, yet it is a huge toll on the public and private dollar in healthcare costs. One more example. PepsiCo built a state-of-the-art factory in Arizona a few years ago, and it was near net zero water waste energy. And when the engineer who led this development was explaining it to me, he was very proud, and I was suitably admiring. It was a phenomenal code, a bunch of codes they cracked. So I said, so now you're going to take this technology and use it in all your factories around the world. That's fantastic. And he said, well, we have to pick and choose. We can't use all of them. And I said, that's crazy. And he said, I know it's crazy, but in fact, until water, waste, and energy cost what they really cost, it won't pay off for 5 years. And the extra money we would have to spend will not look good on our quarterly earnings. This is how the laws of nature and the rules of business are in collision, and how the financial and environmental crises are connected.
Right.
That's what my book's about.
Great. Well, thank you so much. I think, I mean, there's a lot of really interesting examples there. Let me just extrapolate a little bit and build off that, because I think a lot of the work I do is thinking about how companies can bring this into their strategy. And again, there's a couple big categories of what we don't value, and you touched on them in those stories. I think there are first the things that are what are called externalities. That's a big part of the story, and that's the economics term, and that just means the value we get from water or clean water, clean air from nature, the value that the coastal regions that are built up provide to prevent flooding. That value is not put anywhere on anybody's books, right? And those are externalities. Those are positive ones. The negative ones are we put carbon in the air and we're affecting our kind of ability to thrive as a species. Those are the things that are very hard to put numbers on, and they're not in the markets. There's also a category of things that we do not put numbers on in business, but they are internalized value. They affect the business very, very much, but we don't put a number on them either. Like the 5-year payback is a perfect example. That's a very narrow definition of payback, right? If a company uses a lot more renewable energy, there are benefits in that from reducing your risk of relying on volatilely priced fuels. That is a benefit to the business. It's just we put no number on that whatsoever. Sure. And there's those other brand benefits. If we used a bunch of renewable energy, our employees were happy, our customers were happy. Maybe our big business to business customers actually bought more from us because we were doing the right thing and brought our carbon down. Those again are not externalities, but we don't put numbers on those either. So there's these kind of yawning gaps in how we measure things. So
I must mention the biggest piece of this kind of example of what's on the books. Currently, there is $20 trillion of reserves on the books of the oil companies of carbon. Mm-hmm. And according to all scientists, if most of that is burned, we will go over the 2 degrees. That is considered the runaway. Everybody here knows what 2 degrees stands for? Yes. So there's $20 trillion on the books of oil companies that, in my mind, is at risk. So that's the ultimate.
Right. And the pivot point on those moments, or a tipping point where those assets get devalued, could happen very, very quickly.
Very quickly.
I'm just curious, in the room, how many people are familiar with because I think the classic story in understanding there's a value that we're not doing very well on and changing our behavior is really New York City and our water system. How many people know that story about kind of the Catskills and what we did? It's a decent percentage, but I'm hoping maybe Stuart, as the conservationist in the room, can just quickly provide that background story, because it's actually one of the best in the world, I think, and it goes back, I think, 15 plus years.
Sure.
And there's this idea of comparing different kinds of infrastructure that we could build: the green, the natural, and the gray, the human-made. And as it turns out, most of the time, a mix is probably the most efficient. And I think our water system is a perfect example.
Yeah, and I think that, kind of at the core of this conversation is this idea of the value proposition of nature. And, so when Amy is talking about we have to, companies ought to be held accountable for that. The other side of it is that there is a potential great value, and in this case, it was for government, recognizing that New York City has an unfiltered surface water supply. So you can get water by sucking it out of the ground, or you get it from the surface. And it's very unusual for the EPA to allow an unfiltered surface water supply. Usually surface water supplies need to go through filtration. For New York City to build a filtration plant would, at the time this started, there was maybe $6 billion. Now it would be up to $10 or $12 billion. So instead of going that traditional route that's used almost everywhere else of filtering the surface water, New York City realized that it could get a filtration avoidance determination, called a FAD, from the EPA, if its water supply was pristine enough so that it would be pure, and the water that we get out of our taps here would be really high quality. The only way to assure that was to make sure that the rural character of the watershed was not altered. So New York City embarked upon a program with the collaboration of the communities, with the collaboration of the New York State regulators, with the collaboration of the health departments, and with the collaboration of the EPA to buy land, the state bought land, to enter into development agreements and restrictions with the communities within the watershed to make sure that the quality of the water was sufficient to maintain the filtration avoidance determination. And as a result, we get great water in New York City, and we have used that power of nature to avoid a large expenditure. Now, it has not been without controversy, because if you're a landowner in an area in the Catskills where New York City is doing this, you may want to build out something. You're not able to do that. So that's the kind of balance, and there are places where New York City does water withdrawals that creates issues in those communities, and that's part of a kind of continuing conversation. But at the end of the day, it's recognizing that there is a significant value to natural systems that's being well utilized by New York City.
Well, it's interesting because this story also gets at something interesting, which is, if people were building out in the Catskills and that affected the water in the city, that's a cost that we would incur here, right? So that's the externality of that. And so there were two possible ways to price that. One is to try to put the price of water and land in the marketplace with those values included, or just mandate from the government saying you cannot build it out, which in effect puts a very high price on doing it, right? They kind of just made it infinitely priced. Now, it's probably not the most efficient way, and I want to talk, kind of dive in for a second into how do we price pollution. I'll come to you in a second, Kevin, about this, but Amy, you in your book, you said the nature means business framework includes pollution can no longer be free and can no longer be subsidized. So that's partly what we're talking about. But what is the best way for us to price pollution? There's mandate, there's taxes, there's cap and trade systems. Like what do you think is the right solution, or does it depend on the area?
I think that it depends on the area. I think carbon, in a funny way, and I don't really have an opinion on which is the best way to do it, but a price on carbon is probably the simplest version of what can be done. But in terms of the materials we use, in terms of the poisons we put into our manufacturing, in terms of how we produce everything, I think that the only way to do it is to connect the actual value, is to value the watershed, is to value the marine life, to value the pet, healthcare, and connect it, do your best to price it, where you produce it and where you buy it, so that, in fact, a t-shirt should not cost $5.
Right.
It doesn't cost $5, period. If you have conventionally grown cotton that has pesticides that are destroying watersheds and marine ecosystems globally, the framework for what those pesticides cost has to reflect the actual cost to nature. So it's a very painful transition we have to go into, and every time you hear somebody say, oh, it'll be okay, it'll be easy, it'll be seamless transition, it will not be. We are accustomed to spending too little for most of our goods. We buy a bunch of junk and we don't pay. We do. Yeah. And we buy it often, early and often. And we don't pay the real cost for it. So it is a combination of both the producers and profiteers of producing and selling goods, as well as those of us who buy goods, have to accept the fact that we have to start incorporating the costs of those goods into everything we make and do and buy.
And do you think are taxes the
no,
best way to do it?
I don't think it's taxes. I think because taxes are invisible. You need to know that your t-shirt does not cost $5. You need to know that your burger should not cost $1. You need to know, that your $4 a gallon gas does not cost $4. It probably costs closer to $11. That will change our behavior, and that will change our production, and it will change what's profitable. Right now, the biggest polluter makes the biggest profit. That is just a bad paradigm. And in order to change it, those of us who buy stuff need to know that what we buy should cost more. And that's not doesn't make me the most popular person in this room. However, I believe it. And I think that there's a lot of companies that believe it.
Well, you might be popular in the room because if we if we fully price, I make an assumption that if we fully price carbon for all of the health costs of it, the national security costs, all of that, almost every clean technology of scale today would do very, very well. And I assume this room is filled with a lot of clean technology people. But I wanted to, there's an interesting debate, I think, in the clean technology space. And our mutual friend and colleague, Jigar Shah, who founded Sun Edison, is always kind of out there. And he's got his book out now about climate wealth or climate capital. And is always making the case that, we don't need subsidies for renewables. I can win straight up. My solar can beat, fossil. And I love the bravado and the energy of it. So I want to ask you, as a clean tech investor, do you think that's true? Do you think
did you read the Wall Street Journal today?
Can renewables win straight up? And if not, how would you like to see a transition happen so there's a lot more investment going on?
See, I think when you start to look at all of this and you start to understand how technologies trickle through and are adopted into an economy, technology deployments have costs, they have associated benefits, and oftentimes they have very long adoption cycles. So one solution to a problem may have a shorter adoption cycle and longer term payoffs. Where I'm going all of this is corporations and individuals are sort of similarly incentivized. They, accept the rational thought that, or the hypothesis that people act rationally, and so the corporations, they're going by the rules that give them the most near-term gain. So for corporations, that is, earnings per share, or paying dividends to their investors, and those processes by which they, calculate those profits and those associated costs are pretty well understood by everybody. So I think you have to look at various opportunities when you're approaching it from an investment standpoint. As an investor, I think everybody would like to make that investment in fusion, and you get rid of all of the natural gas and all the carbon and all the coal and everything at once. But the realistic expectation is that, for example, when New York City is approaching eliminating emissions in the city, does the city go out and spend $1 billion on electric buses that cut emissions, or do they go out and spend $25 million on an initiative to make building owners and supers more aware that they need to change out their HVAC or their heating units, or get off of home oil, or change over to some new, more efficient, frankly, very reliable technology? And it's not always solar, it's not always wind, and it's not always smart grid. It's pretty basic stuff. So, I always, I appreciate all the smart people in the world who are thinking about all these hypotheses and things that could happen. But so from an investment banking angle, it really, the technology has to drive through. It has to drive efficiency through the business, and it has to show up on the income statement as profit. And I think, that would be. I see. We probably started the debate already, but go ahead. I'm done.
Kevin. See, I think that, in fact, you're talking about HVAC systems. I did a lot of work on refrigeration and refrigeration chemicals across the whole, both the refrigeration, air conditioning, and consumer goods sectors with a lot of very big companies. And with really strong push from Greenpeace, we then ended up transforming technologies used by 400 of the world's largest corporations. And for many of these corporations, their refrigeration is number one or number two piece of their carbon footprint. And so the transformation, I think for you to say that it's only things penciling out as they look today are not, Amazon 10 years ago, oh, this poor company's going to go out of business.
Well, it still loses money, actually, Amazon. But but it's an interesting point. They're allowed in some sectors, in social media or internet. You're still allowed
That's right.
to lose money for years and years. And in
That's
clean
right.
tech, there's one government loan that goes under Solyndra, and all of a sudden there's discussion of all solar is a bad investment, which is just insanity, right? I mean, there's.
Well, back to your original point, I think because of the way, as you so aptly pointed out, the corporations, their mindsets are, I think the government, there needs to be some incentives for people to move in a certain direction, and I think that's a viable role for government and to get everybody's awareness. But, at the same time, it's just the way that the financial markets work, the technology has to pencil out. And, so often when you get down to penciling it all out, power is really cheap in this country.
Yeah, but that comes back to then if we put a price on carbon, the power that's really cheap would be a lot less cheap, and the power that's more expensive would seem cheaper. So what's interesting is I don't hear you saying, so I'd really love to see a carbon tax. So, but you want to see more, clean tech and more renewable energy. So what do you think does need to happen? What's standing in the way today? If it's not kind of pricing out, so the penciling out.
I
changes.
work on the answer to that question every day.
Yeah.
I think a greater awareness of technology risk, a greater awareness from, as Greenpeace has done some great work with some of the biggest corporations in the world and has driven some innovation there. And I think just getting the mindset, to where there are technologies out there available that can lower the overall cost. However, I'll say this. Walmart doesn't put in, lighting in their stores, natural lighting, just basically bubbles that let natural light in. They don't do that because they want to save power on their, or save energy on their power bill. They do that because they've found out that retail customers will buy more if they get sunlight.
Well, no, it also meant the 2-year payback, right? It was all of it. Right?
But it penciled out.
Right.
And it had other benefits. So I think from a financing perspective, I think some of the big institutions are getting there. They're starting to understand that there's probably less technology risk than they thought, but you get into things about execution risk and contract risk and offtake risk and supplier agreements and things like that. But
so there's a risk aversion problem.
Absolutely.
So maybe companies are overpricing their risk or on some levels. They're not. It seems like they're under assessing the risk of a huge supply chain disruption like in Thailand. If you were making
in
cars in
India
Thailand,
or Coca-Cola
or
or
a sustainability
anywhere. Yeah.
risk,
Right.
right? If you're a big producer of water
Right.
and you're not actually focusing on the sustainability of that watershed
Right.
which you're operating, so part of the business case should be looking at that value. And I think, it's one thing to say, well, yes, government does have a role in providing incentives, and those incentives should be an even playing field. So if there's incentives for fossil fuels, then clean tech is always going to lose unless there are incentives for clean tech as well.
Right.
But I'm sitting here listening and thinking to myself, not only that that's probably $100 bottle of water in front of me by the time you factor in the whole cost.
But if you think gas is expensive, this is really expensive.
Yeah, but that actually translating into money is actually not always the answer, because if you're talking about an impact on a natural resource, just coming up with money to repay the debt is not going to do the job. So it may be that if, let's say the impact is going to be that you're going to be filling in a wetland, right? The way you should pay that debt is by doing a mitigation project so that you, say, restore 2 or 3 acres of another wetland. So it's achieving the balance. And while I understand your theory about proper valuation is going to drive the markets in a way that will lead us to maybe less consumptive use or less pollution, I think from a practical standpoint, we really need to be figuring out how the business case is going to include taking steps that actually serve to value and in a practical way protect those natural resources.
well, on some level, putting a value on some of these natural resources is a surreal set of questions. I mean, there's been numbers floating around for years of how much natural capital is worth to the
Right.
economy. 33 trillion was a number in the late 90s. Call it 50 trillion in today's dollars. But on some level, it's infinite. I mean, from our perspective, from the planet's perspective, the planet doesn't really care. As, George Carlin once said that the planet will shake us off like fleas if it feels like it. We're kind of self-important about this. If there's no water in your area, that first drop is worth an infinite amount, right? So there's kind of a strange set of questions that we're asking here of trying to put a number on something that may be invaluable.
But we have systems set up that require us to do that.
Right.
So if we
You mean
if,
to make with
that
the government?
require evaluation? Yeah. So
Right.
for example, when we're looking
That's
at the recovery from Sandy, right, and all these billions that are going to get spent, you have choices. You could just build gray infrastructure. You could build green infrastructure. You could do a hybrid of green and gray. But what's going to drive some of those decisions is a cost-benefit analysis. And if the benefit part of that equation doesn't capture the value of natural systems, but it's geared toward building a wall that's going to keep water out if there's a storm surge, but if there's 14 inches of rain, it's actually going to rain on both sides of that wall, then you have to make sure that the systems, the processes, actually do capture those values. And it's a very tricky business because you also, if you're going to really capture the values, you have to capture things like the other co-benefits to communities. So if you're going to put rain gardens in a community to help solve a stormwater problem, and that improves the property values in that community because it's a nicer place to live, or you open up the waterfront, those are values that need to be captured as well. And it's hard to do that.
Well, go ahead.
I want to say that the Nature Conservancy did something amazing in Mexico that makes me think that in addition to the economic and financial value, I think that there is a cultural change that your organization and many other environmental organizations and green capitalists, et cetera, have been pushing, which is I was with the senior VP of Coca-Cola Mexico, I don't know, a few years ago, and he was talking about the project he was doing on watersheds with the Nature Conservancy where they spent $27 million. And I said, well, why'd you spend the money? And he said, well, because the magic is in the ecosystem. 5 years before this man would never have thought that. It has now, there is a new level of understanding. And he didn't say this, there was no propaganda, we were having drinks, it wasn't for show. It was simply an understanding which his company now has. That's a sea change. Yeah. And I think that is a value that we now have to incentivize. There are enough companies who now have that value, that non-financial value understanding, driven by financial value, of course, but it is not only financial. And now's the moment to incentivize those companies to move big.
And on sort of talking about scalability of that sort of thing, I always look at a chart that I like to go back to every once in a while. It's a projection it's a projection of cell phone sales over the next 20 years. But the report was written in 1994, and when you look at this hockey stick, escalation, you say, "Wow, there's just no way that can be true." Then you overlay what really happened on that, and it is magnitudes higher. So I think where we are right now, and what you're explaining is, people are coming around. It's like, imagine, where you were in 1994 and what you thought you could do with a cell phone, and where you are now, and how your smartphone changes your life.
Right. Well, I think we're in an interesting very similar cycle, right? The amount of money that was spent on the mobile build-out was a couple trillion over 10, 15 years, and we're on a very similar pace now on, broadly speaking, the clean economy, and I think we'll outpace mobile. And I use that example. I mean, think what that mobile build-out has done. You're sitting with all of the collected information of humanity in your hand now from that build-out. So what will this clean tech build-out be to humanity and to business? Who knows? I mean, no one knows exactly what it's going to look like, but I think it's going to be as profound. So I think we're winning. I do, but it's clear versus the science of the problems we're facing that it's not fast enough. And so I think that's kind of the challenge here is, how do we move faster? How do we accelerate the rate of change? And I mean, you've described the companies are pretty risk averse. What do you think? You're saying, I want to dig into what you said before about having them understand technology risk. Do you mean having them get more comfortable with taking leaps of faith on technology, or getting some to be more of leader? I guess take a leadership role more.
I always look for very simple explanations for things, and usually the simplest does the trick. Also often, when you start to look at new investments and new technology rollouts within an organization, there's somebody there who's a gatekeeper and a decision maker. And I think when we come out of a climate of near systemic collapse of our financial system, there was a credit crisis. I think we're coming out of that nicely now. But if somebody makes a bad choice, they lose their job. And they've managed to hold on to their job through all of this, and they really don't want to lose it. So I think there is some immediate pushback just on the logistical level of trying to get people to understand this. But I think as mandates come forward, and as other companies work with Greenpeace and groups like that and become more efficient and more profitable, other firms are going to do the same thing. I'm not expert enough to talk on the difference between Google and Microsoft, but I understand they have two very different approaches to the market right now. We work with Google, we know them better than Microsoft, but one's actively out there making this technology happen, and one is sort of, doing it in a financial engineering way.
Right. That's right. For people who don't know, I mean, Microsoft's charging an internal tax. There's been companies doing things like that for years, but usually they were shadow prices. They were kind of invented for making capital investment decisions. Internally, Microsoft and Disney are really the only two companies I know of scale that are charging actual money to their divisions, and it's a nominal amount, but it does signal something. And Microsoft just committed to buying, I think, all the wind power of a Texas wind farm, for 20 years, using that money, collecting something like $10 million a year. It is a different approach. I mean, Google's set out to just change the economics of energy. I mean,
Everything,
that's different.
right?
Yeah, I mean, that's different.
Well, there may be that, you do need a number of different kinds of approaches to force this change. So one, what Greenpeace was very successful at was getting these companies to the table and then rolling up your sleeves and then trying to figure out an answer. But the way you got the companies to the table was through, employing some pretty dramatic strategies to attract their attention.
Yes.
A different model for that is, the Nature Conservancy is engaged with a number of big companies in trying to figure out, well, what can they be doing in their business practices that makes sense for the company, that makes sense for the natural systems, for the environment, and looking for those solutions, like what we're doing with Dow.
Yeah,
in
can you
Texas.
describe that a little bit for
Well,
folks?
we're in a collaboration with Dow. We're over a 5-year period. We're looking at, in a major industrial site, alternatives to their traditional processes, using things like, instead of building gray infrastructure, building a wetland, right, and using that for water control and other types of systemic changes, and doing it in a very transparent way, driven by the scientists, and then at the end, doing an assessment to determine what's worked, what hasn't worked, and we don't know what the outcome is going to be, but we know that Dow is committed to trying to do this, and with our scientists, the Nature Conservancy, this is a way of demonstrating to other companies that it makes sense to be doing some of this. And then, you also have government action. The government can drive technology, although sometimes the government is as risk averse as the private sector when it comes to trying new things, right? So, I think there is sort of an all of the above answer to the question of what's going to drive this.
Well, the Dow relationship with TNC is really, incredibly interesting, and it's in a pretty intense partnership, and they're spending a lot of time and money on this. And I've spoken to both sides of this, and the place they started was in Texas, right, with the largest refinery in the world in South Texas, and Dow's facing tremendous risk over the coming years with water availability, because Texas is in essence becoming a desert. I mean, the water shortage is not probably a short-term thing. It's kind of a permanent shift in climate, and there's incursion of salt water. I mean, there's all sorts of massive costs to them, and so they're looking at all these different possibilities. And I think TNC's been incredibly helpful in kind of pricing out the value of using nature to provide the kind of barriers to the problems they're facing of either lack of water or too much salt water. And I think what's interesting in talking to Dow about this is that if you say, well, there's no price on water today, they're doing this because they believe there will be, and I don't think anybody knows how. I mean, that's kind of the challenge you're hearing today, probably, which is, well, this is lovely, but no one knows how, but they believe there will be, because they just don't believe the community around that facility or any facility will continue to price water at nothing.
I think that one of the things that we mentioned before on how things can turn on a dime, the drought levels and the flood levels, but let's just stick with the drought levels, are so severe in so many places in the world that the possibility of water rationing is potentially upon us like that. So last summer in India, they had to decide, are they going to use water for energy or for food? And they chose food. But in fact, that meant 650 million people had rolling blackouts all the time. And so we are not above this. We are absolutely in a situation where in the Southwest, where huge amounts of our food come from, the potential for rationing, changing of zoning, changing of how your house can be gardened, landscaping, what can be built, for how many people, for what businesses, those changes could happen very quickly. And so any smart business is aware of the high risk of that.
Well, I think you go ahead.
Just on that topic of the Texas drought that's going on right now, I think it's really notable. Most economic historians would agree that the crash, the Great Depression of the 1930s was kicked off by the collapse of the stock market, but it was prolonged in a very big way by the Dust Bowl. So, that shouldn't be lost on people.
Right. Oh, and there's the connection, right? The connection of the financial and natural collapse. So there was a discussion that we started to get into on the idea of building in resiliency, around the city. So, Mayor Bloomberg, as one of his last acts, has his $20 billion or so plan, and it will cost probably much more than that to future-proof or waterproof. I don't know. I mean, the wall around the Lower Manhattan thing, I'm not sure what that means for like New Jersey, because the water has to go somewhere. So I don't really quite understand that.
Exactly.
If you build a wall, it's just going to push off somewhere else. So I wouldn't want Christie coming at us, I think, Hurricane Christie. But and we were talking backstage about people are trying to rebuild, right, in Seaside Heights and everything. who should pay for this? Who should pay for if it's going to cost tens of billions of dollars just for New York City? How do we allocate that? You know, how does it happen?
Yeah, well, that's a great question, and there's attempts are being made to try to end some of the government subsidy towards bad decisions,
Right.
and that's why Congress a couple of years ago started to change the rules for the use of FEMA money so that you don't just rebuild in place. And I can say as a taxpayer, I'm not very happy if after a big flood wipes out a road, that the condition for the use of FEMA funds or DOT money is that you build it exactly the way it was before. So that, and that's what happened actually with Ocean Parkway by Fire Island. We rebuilt exactly the way it was, it'll get washed away again. But, I do feel you need to start by not distinguishing between natural infrastructure and built infrastructure and just saying it's all infrastructure. And so, yes, the government, right, our taxes, we need to make a big investment in infrastructure, but we should be making a smart investment in infrastructure. And, it means in some places building a wall would be the right thing. In other places, restoring a wetland is going to be the right thing. And in other places, maybe building a smaller wall and doing a wetland restoration would be the right thing. Building oyster beds to break up wave action or other things. There's a lot of choices, but we need to be thoughtful about the decisions that are made. And it's going to be, at the end of the day, the taxpayers. We do get into a question of, well, if there's a particular community that's vulnerable and it wants to stay there, then should those residents be the ones who are going to pay for staying there? And that's a big public policy question that I think we're going to start seeing played out. Yeah.
And I grew up on the South Carolina coast, and I spent a little time at the Jersey Shore this summer. It was pretty total, the devastation that was done there. It was really empty, but I noticed that some of the houses they were building back were being built back exactly as they were, maybe because they weren't so badly damaged. And then others were being built on stilts, but they were only like 3 or 4 feet high. I can tell you in South Carolina, the houses are 15 feet high up in the air. They have breakaway walls. They're all built on stilts, and that still does not keep most of them from being destroyed.
Right.
I grew up down there, so I lived through Hurricane Hugo in 1989, and the little island where I spent a lot of time, the Isle of Palms, was ground zero, and it just was devastated. And a lot of those families that lived there simply could not hang on to their property. They were told that this is the way you have to do it, and if they couldn't get that done, then they had to sell the property.
So we have some good questions coming in. I think it's time to kind of open it up. There's one I'll just answer really quickly. It says, I pay for water at home. How can you say we don't pay for water? I mean, I'll just say, yeah, we all pay a little bit, but it's a fraction of the real value. I mean, like the refinery example at Dow, they saved 1 billion gallons through a bunch of efficiency efforts. It saves them a few $1 million. It's a rounding error for them. Nowhere near the value of the water to their production. But they do it because just business continuity. So again, there's kind of this additional value that the smart businesses are putting on it. But as individuals, we pay very little for tap water versus what it provides to us. That's probably giving that short shrift. But let me ask you all to answer this one. If you could implement one change in public policy or business practices to make companies better account for natural capital, what would it be?
Price on carbon.
And how would you do that?
I don't really have an opinion on the different ways. There's some version of a price on carbon that begins to alter how we quickly can transform into a low carbon economy.
Mm-hmm. Stu?
I'll pass. You can go first.
Wow.
I'm thinking. It's my legal training.
Yeah. Boy, now I really don't want to say. I think the decision-making process, whether you're a small business, looking at changing your LED or, going to some sort of solar or replacing your refrigeration units, I go back to sort of the economics again. I live in a world of, the way things are right now, and there has to be, thought process. If you're running a grocery store chain of 100 stores and you can change out your refrigerators and lower your emissions, I'm just guessing that there's probably some efficiencies there that aren't being priced in, and you're definitely going to be saving money. I just see it over and over. And small business owners and large business owners are alike. once they start thinking this way, it sort of catches on. They cut their consumption, and they try to get cheaper power supply, and so on.
So this
and
question
so
to
forth.
try to declare you king or president, you still don't want to come up with a specific policy that if you could just snap your fingers?
I do have one.
You have another one?
I do. Well, go ahead,
No,
Stuart.
no, you
So, I mean, it
No,
sounds like
it's
it sounds like you're,
These are the policy people.
well, it sounds like you're talking about kind of almost like efficiency standards or something that just raises the bar for what people are going to kind of change out, and then they're going to invest more in the kind of technologies that you're backing. If we're raising the miles per gallon on fleets, people are going to buy a larger mix of zero. I know you invest in like a zero,
Right.
Electric truck kind of
Right.
business. So I think that's another category. I think for me, the price on carbon is by far the biggest. I mean, I have an economics background, and a tax is the most efficient, by far. There's risks to it not accomplishing what you want it to, and that's what people argue for when they say we need a cap, because then you're actually capping to the number that you think we need scientifically. But I think a tax, if managed right, gets you to the right number. So.
But I'll cheat for a second. I'll
Yeah.
go back to the other question from the gentleman that said, I pay for water in my home, right? If I'm a business, I'm paying the government for water. So I don't want to pay the price of the value that I get from it.
Right.
I want to pay the cheapest price possible because that drives the bottom line.
But actually, I think that a lot of businesses actually,
I would be the one to get you all fired up, by the way.
a lot of businesses actually think that they should be paying more for water because they just don't want it to be just them.
Right.
They want it to be across the board.
No, in certain watersheds, there's plenty of businesses who know that whatever they do efficiency-wise doesn't matter if every farmer and every business and every home in that
Exactly.
region keeps
Exactly.
using, and it keeps growing, and then they're out of business, right? These, the beverage companies are really big on this, and so they do want to pay more.
They
I think
do.
They just want
They do.
everybody to pay more. But we
Right.
get with water, we get into some really dicey areas because it is considered a human right by most people, and probably rightly so.
Right.
And so you get in, and that's why it's underpriced. It's a societal choice, and one that has made sense.
But ultimately, the environment and clean air and everything is, and it all ties back together.
Yeah.
Right. So since I've had my plan to have time to think
Right.
has worked, no, I think what I would do is I would reform our regulatory structure so that it rewards innovation, which right now it doesn't. I think that our regulatory systems have a tendency to push people to be doing the same sorts of things that have always been done. So I would try to, just about every big business has to comply with all different kinds of regulations. And if their lives would be easier, the business lives would be easier if they were innovating and doing things differently. And of course, I would gear it towards sustainability and figuring out the relationship with natural systems where that might be helpful as a way of addressing this cost. I think the regulatory structure has to be is one of the ways that could drive it. So it's not just the penalty of a tax, but actually the kind of nuts and bolts of operating.
And we all hate technology that makes us do something, right? We want a technology that gets us to do something better. And I think the regulatory framework could do much to sort of listen to some tech entrepreneurs and say, what can regulations do to incentivize people, positively incentivize them to innovate rather than just kind of.
Well, that's what the efficiency standards do, right? They say you got to reach this number. We don't care how, and then it drives innovation.
But, in fact, the U.S. government stepped in the 1980s when the microchip industry, the semiconductor industry in California, was being killed by Japan, and the U.S. government stepped in and supported them with this organization called Sematech. And so this fantasy that the government doesn't place bets on winners, the government places bets. And
It bet on the internet.
yes, that's
And
exactly what they
I was going to say,
did.
they've done a pretty good job. They've had a lot of big losers and some blow-ups, but it's been a pretty good use of taxpayer money overall.
Yeah. It
Well,
has.
so that would lead me to the other. I have a second one, right?
Okay, go ahead. You can have as many as you like. You're king in this. You're
Oh, there you
queen.
go. I love queen. I love being queen. So the other thing I would do would be to provide accelerated depreciation for green investments. Because I think that would allow a company like PepsiCo to deploy that phenomenal, great technology they developed in Arizona globally. Because it would pencil out quickly, Wall Street would love them, the world would have more factories, net zero wastewater energy. And not only does PepsiCo know that the world needs that, everyone knows the world needs
And
that.
I'll just, the other part of the question is, or business practices, and we've talked about policy. I just throw in, and I can get on a soapbox about this. I wish business would change the way it thinks about or uses ROI as a tool. I think it's broken as a tool for all the reasons we've been talking about, because we're really good at the I side. What's the investment? We're really bad at the R side. We don't measure a huge range of returns from the things we invest in. And frankly, the 2-year hurdle rate, which I have heard just every company uses like a cudgel for why they decided, the 2-year hurdle rate is invented. I mean, I don't know what accounting group came up with 2 years. That's an incredibly fast payback on your money. There's almost nothing you do in your life that pays back that fast. And what's weird about it is most businesses are spending huge chunks of money on things that don't pay back that fast. But when it comes to certain categories, anything that's called green or sustainable, there's kind of this guilty till proven innocent, and it has to pencil out in a very, very narrow definition. So I'd like to see some leaders take a more strategic view about the investments they're making and say there's a huge range of benefits to us for investing some things that maybe pay back in 4 years, heaven forbid. And also the cost of capital needs to change depending on the kind of investment. That's right? If you're investing in something for your building or for your factory that's a 40-year asset, a 2-year payback is crazy, So that's we could talk about that for a while, but I think just changing that tool in companies would be great, and I'm starting to see CFOs, controllers, whatever, starting to be at the table about these conversations for the first time, for real, and understand that something's off. In part because as people probably know, the majority of a company's value in marketplace now has shifted from the 70s, where the vast majority was on the books, was financial or manufactured capital, and now the marketplace is 80-20 the other way. It's intangible, it's brand, it's people value, it's other things, goodwill, but goodwill is actually on the books. It's a bunch of stuff that's not. And so even the controllers are controlling vapor. They're controlling a small percentage of the actual value of the company. And so there's something missing. And I think that's what we're talking about here today. So I think, do we have any, I have one more here, if we have more. So this is a kind of important question. How exactly do you go about pricing environmental services? And when investing in nature, how do you decide on a discount rate? It's a very specific question, but it's an important one. Does anybody have an opinion on that? I mean, there's a lot of social cost of carbon calculations out there. There's a lot of discussion about, discount rates. Anybody got thoughts?
Could we repeat the question one more time? I just hear it one more time.
Well, how do you price environmental services? That's what we've been talking about. But then if you're investing in nature, how do you decide on a discount rate? Well, it's what I was just saying. The cost of capital on certain investments needs to vary. So what do you do with nature?
Well, I think that, first of all, the accounting firms, the big accounting firms, are starting to calculate the cost of nature. So is everybody here familiar with the environmental profit and loss statement that Puma created for its 2010 operations?
You should explain it.
In PricewaterhouseCoopers and TrueCost, a smaller firm, created for Puma for 2010 an environmental profit and loss statement. And in that statement, they measured the actual cost as best they could of the greenhouse gas emissions, the water usage, the land use, et cetera, et cetera. And it showed that if Puma had paid for the degradation they caused to the environment, it would have cost them 145 million euros, which was 72% of their 2010 profit. Now, the fact that Puma did this was very courageous, but the fact that Pricewaterhouse developed a technology with TrueCost, they went down 4 levels of the supply chain, that is a serious attempt at measuring the cost of nature. KPMG, in I think it's 2009, recently measured that the 3,000 largest public companies were causing $3.15 trillion of environmental damage a year. Again, I think it's astonishing that Pricewaterhouse and KPMG actually tried to measure costs that will antagonize most of their clients. Sure. So that, to me, is more astonishing than the numbers. China recently said that 3.5% of its GDP was caused by and cost from environmental degradation. They said it's 3.5%. Who wants to guess what it really was? You know, there are the World Bank is beginning to measure these costs. There are large economic groups and financial service firms beginning the new process of measuring the cost.
So, you know, it's interesting that, so you're thinking of this in terms of cost. The other way of where you need to measure it is in terms of benefit, right? And
Yes.
there's a whole other equation for value. It's an excellent question, and I think the answer is that it's a work in process. You know, you've explained a number of the different things. There's a lot out there on value of ecosystem services, but if you're a business and by incorporating some kind of natural systems approach, you know, using the floodplain to benefit you instead of filling it in and making it a parking lot, and then doing some other way of controlling water, you know, you can put a value on that. You know what your cost is going to be if you don't do it. You know what your cost is if you do it. And, you know, then it turns into the value proposition for businesses. So I do feel that it's important in a very nuts and bolts way to be thinking about how businesses are going to benefit by recognizing the value of sustainability, protecting, preserving nature and natural systems, and so on. So I think we need to look at both sides of that
I
equation.
agree.
Well, is there a question from the internet?
There's actually a question from
From the interwebs,
from the
is there
Twitterverse,
something?
is what we like to call it. First of all, I wanted to give a shout out to some of the comments. At Kaz Smith said, to Amy's comment, we buy junk and we buy it at too low of a price. He said amen to that. So we've got a very excited audience. And also the stats that you brought out in the beginning about, you know, our burger doesn't cost $1, and I forget the other ones. There was a lot of activity on the Twitterverse of people being like really excited about all of that. So I actually wanted to kind of take it in a different direction. This is from at ECS Chris. What role, if any, do renewable energy subsidies play in balancing our environmental budget? In past events that we've had, actually, people have said renewable energy subsidies are actually hurting.
Have said what?
Renewable energy subsidies, they're actually like hurting the industry. We have to stop being dependent. And other people have had, you know, other opinions about that. So we'd love to have kind of the thoughts of everybody on the panel. Are subsidies for the renewable energy industry a
This
good
goes
thing?
back to the question
Yeah.
we you know, earlier on about do you need them to accelerate renewable energy?
I'll say, yeah, they do have their place. But I think it's very, very, very important for people in this country to understand, and as the world becomes more commercialized, that ultimately you vote with your dollars. If you want something done, change your behavior. If they put a McDonald's in your neighborhood and you don't want it there, don't eat there. They'll close it down.
But so I want to say that right now, the biggest subsidies, I personally think that with things like accelerated depreciation, with things that this is a moment where transforming to renewable energy is such an urgent need for the world. Of course you incentivize it. Of course you subsidize it. And the savings that will accrue to the public budget are so much more than the subsidies we would give. So in 2011, Harvard's Center for Global Health and the Environment created a study that measured the external costs of coal in the United States every year. It was $400 billion.
That's right.
So you and I are subsidizing the coal industry to the tune of $400 billion a year. Would I rather spend $400 billion to develop a renewable energy grid and industry that is world-class and competitive and innovative and solve some of the difficulties in the industry? Yes, I would rather. I think that obviously we need to make the transition from where we are to a renewable low-carbon economy. But we are currently subsidizing the fossil fuel industry in everything we buy and do, especially with our tax dollars. So anybody who wants to talk about oh, you can't subsidize renewables. Well, then let's not subsidize fossils.
The only argument I've heard again, and I agree with you. I think, given the risk of climate change, and we sit in these kind of events very calmly, sitting here, while we're facing species level crisis. I think when you start talking like that, people think you're being overly emotional. Let me be really clinical about this. This is odds. This is calculation. This is science. This is physics. We're at complete risk for our society to exist in any way that's comfortable at all for 7 to 9 billion people. Given that and the uncertainty, and people are always throwing out the uncertainty of climate science, the uncertainty is the other way. The uncertainty is about how bad it'll be. And in fact, I am so tired of seeing reports of Arctic melting faster than scientists thought. I'd like them to actually go a little more extreme with their statements so that we stop doing that. And so I think given that, just as a risk reduction, we have to accelerate renewables faster. The only caveat I've heard to that is folks like Jigar Shah or other investors saying that they believe more money will be released, and maybe people in this group would agree, trillions that might be sitting on the sidelines if there's no subsidies for anything. And so that the investment community feels there is no risk of subsidies disappearing, right? That it's just out of the equation. And that it would be easier politically to just get rid of all subsidies than get rid of fossil fuels and keep renewables.
But the problem is that for the fossil fuels, as Mike Carr, the former senior counsel for the Senate Energy Committee, said, externalities are the mother of all subsidies.
Right.
So the fossil fuels are their real subsidies are in the hidden
That's right.
costs. Their subsidies are not, if there's a billion here, a few billion there to the oil or coal companies, whatever. It's a rounding error.
Right.
The big money is in the hidden costs.
Well, and I think there's a way potentially for government around some of the debate, which is to just use its purchasing power more so than potentially giving money. I mean, I thought, for example, we bailed out GM. Instead of giving $40 billion, we could have just said, we're going to, as a government, we're going to buy 1 million volts by X year, make them for $40 billion. Right. We could use that, and that is happening to some extent, but we could, and the military, if people don't know, I'm sure people here in the room are selling to the military, is doing more than I think almost anybody right now. That buying power is a way to subsidize without feeling like it's at risk of, the whole PTC thing with wind is what Jigar's talking about, I think, which is if it's in and out, you don't know what you're investing in. You don't know how to draw your payback. You don't know how to pencil it out, right?
It hurts.
But knowing that there's a contract for X years is kind of golden, right? So that's one way maybe around the question. There's kind of a fun kind of tangent kind of question. Would you consider geoengineering a realistic option, either besides or in addition to greenhouse gas reductions? I mean, and I think it's an interesting question for this room because I'm sure there's people who would consider some of them clean tech plays to say we're going to take carbon out of the air, or we're going to, do something with sulfur in the atmosphere.
And I'm sure it couldn't have any unintended consequences.
None.
Can't think of any.
No?
I'm passing.
Nobody positive on geoengineering?
Stop cutting down all the forests.
That is a form of geoengineering. I'd only put one category that's safe, which is the technologies that people are playing with to pull carbon out of the air. I think that would be hard to do at a scale to matter, but hard to do in a way that would actually be negative. And it actually just is cleaning the air. But yeah, the things where we're going to put more stuff in the atmosphere, we're going to put something in space that blocks sunlight, that just scares the hell out of me. I mean, it's just, I just picture Dr. Evil with like a microwave beam, it's just there's some really scary stuff there, and
So-
it's really
Right.
to believe that we could control it.
So you do appreciate the irony here of a couple of moments ago we were talking about the difficulty of getting companies to go with new technologies. And we're saying, well, there is actually a limit to this.
Right,
So,
right. That's true. We want to do new technologies, but not so new.
well, or, I think it's got to be innovation at a pace that may be just slightly uncomfortable.
Right. I think we've got to be more than slightly at this point. Let's see. I mean, there's a whole bunch of things we only have like 6 or 7 minutes left. So I don't want to go down too many rabbit holes here. If nobody has any other questions, there's plenty of other things we haven't really gotten to. I mean, Kevin, I haven't really just kind of asked you. Oh, go ahead.
One question that came out, because we've been talking about innovative technologies, and at Jeff Irvine, actually, who used to work at Solar One. Yay. He actually asked a question about what the government can do to spur innovation and entrepreneurship and new technologies, and potentially a way to, have these technologies help reduce our overall environmental debt. And what mechanisms have you seen that have worked, that haven't worked? Maybe your example, you do so much with land conservation. Have you thought about using emerging technologies in that process? So I think that would be an interesting question to delve into.
Yeah. So I do think that government can play a very significant role, and one way might be to have just a little bit more tolerance for trying different ways of doing things, pilot projects. That it's not such a battle for people to, try to attack problems different ways. So, for example, if it's an air pollution issue, instead of having to invest in the scrubbers that you might typically do, maybe you could do less with scrubbers and plant, 1,000 trees somewhere. But to try to get regulatory approval to do that, if you're subject to a Clean Air Act state implementation plan, that could be more trouble than it's worth. So, I think that's one way, just creating a playing field where people aren't deterred by, sort of the requirements of trying to even begin to innovate. And I think government actually, may talk a good game about innovation, and there are things that government does to sponsor it. There's incubators, there's, pollution prevention institutes, stuff like that. But ultimately, the regulatory costs are pretty high, and I would take a really good look at those.
Maybe the government could put up a clearinghouse website, because I hear they're real.
Yeah.
You are
No one's
cruel.
laughing. I know.
How many Silicon Valley executives
Yeah,
will go offline for that?
Let's contract that to a Canadian firm
And through a
instead of
Canadian
going
firm,
to Silicon Valley company.
And I'll touch on. Go ahead.
Oh, no, okay.
Please, no.
I think that, getting back to what Andrew said before, we are at a precipice in our environmental crisis. And, we're all comfortable today. We've all have enough food and water today. But that could change very, very, very quickly. We are really at a dangerous moment. And for me, I think that the government should convene a Manhattan Project-style group of the world's best scientists and somehow find a way to incorporate patent pooling into the project so that large companies like IBM and GE, which have billions of dollars invested. And I think that the issues of storage and transmission for renewables needs to be addressed as if it is, our lives depend on it, because they do. And I think that that is in our absolute national security. And the Defense Department, in fact, does a huge amount of research and innovation and probably has the best R&D on this in the world. However, it's not enough. And there's too many private players that are not part of the system, and they need to be brought in.
And I guess my thought on the whole government involvement is, the United States military is doing a fantastic job of really adopting a lot of these technologies, being open about it. They have mandates down. I heard a general at a Pentagon press conference last week, or maybe it was this week, say, one of the press reporters says, well, why would they do this? I said, because we tell them to. So, not a democracy. So things are happening there on the military side, and they understand. I mean, the burden of inaction in our country has fallen squarely on the men and women who are in the military. They are, beyond a doubt, guarding this nation's energy pipelines, and they talk about costs that you can't calculate. It's our talent and our treasure coming back in body bags, and we all have an opportunity here to do something about it.
Well, on that note, why don't we, let's try to, we have 2 minutes. How about a final optimistic note, if we can
Is it that
we
bad?
can muster it. Anybody?
I want to say that the work that I have done, continue to do with large multinational corporations says to me there are huge numbers of businesses and executives and boards clearly ready to make the changes. We just have to set it up so they don't go out of business when they do it.
Yeah.
Yeah, even though we're on the brink of extinction, as you point out, I'm actually really optimistic because I do think in a very nuts and bolts and practical way, there is a lot of great stuff happening. And while, a lot of the conversation tonight has been about theory, we do really need to keep in mind how to turn that into action. And, engaging with not just the corporate stakeholders, but the community stakeholders as well is really important. And every time there's a victory with that, every time there's a DAO project that works or the other kinds of things we're doing around the world, same model, different scale with water funds or whatever, every single one of those becomes replicable and the foundation for another one. So I think that that we have a lot of good reasons to be optimistic.
I would agree with all of that.
Okay.
Well said.
And my specialty, I guess, or work is with just large corporates. I don't understand the word corporate. I find as a strange noun, but I think it's a weird way to refer to people and companies. But I think there's a lot more going on than people realize. It's maybe not be at the pace that we would like it to be, but the goals that companies are setting are getting more and more aggressive, and many are impressive. Like we're going to be 100% renewable energy. We're going to,
2020.
but we're going to cut emissions by 20, 30, 40%. There's a lot more of that going on. I just a few days ago launched a website called Pivot Goals that tracks the sustainability goals of the largest companies in the world. And in doing that research, was pleasantly surprised. I set out thinking most companies were nowhere near setting goals like we needed to at the level of science. And it's not all of them, but there's dozens of very large companies with very impressive goals. And I think the first step is setting your target, right? It doesn't mean they'll all reach it, but that is the first step. And I think we are moving faster than probably people realize. So I do have my optimistic moments about this. So I want to thank the clean tech community for being here and for listening online. And please, can you join me in thanking our panel?
And give a round of applause to Andrew Winston, an amazing moderator. Thank you.
It was easy with you guys.
So folks, if your question didn't get asked either through note card or Twitter feed, please feel free to ask them right now. We're starting the networking portion of the event, so the bar is going to open up. You can have some beer, some wine, some conversation, and talk to all the panelists. Thank you so much for coming, everyone, and see you all in 2014. Yeah.